All right, let's take another look at shares of Silicon Valley after.
What is going on then at SVB?
Well, we saw a very classic run on the bank. SVB had a few problems. It wasn't a great bank.
A significant event has occurred in the banking industry as the FDIC announced the closure of Silicon Valley Bank, a major lender in California, due to the reported loss of more than $1 billion. This is a shocking news to the tech community and makes the largest collapse since 2008 crisis. SVB Financial CEO Greg Becker conveyed a video message to the company's employees, acknowledging the strenuous 48 hours that led to the bank's collapse as incredibly challenging. It's a significant event for tech startups who rely on SVB for cash management, including deposit and payroll service. The FDIC has assured insured depositors that they will have full access to insured deposits by Monday morning, up to $250,000. Nonetheless, some small businesses, startups, and individuals may have deposits exceeding the insured amount. Tech companies including Roblox and Roku have confirmed that they hold deposits worth hundreds of millions of dollars with the bank in question. Roku revealed that a significant portion of the deposits with the Silicon Valley Bank were uninsured, resulting in a drop of 10% of the shares during after-hours trading.
Roku has funds at SVB Bank. They amounted to $487 million, which of course largely uninsured.
Silicon Valley Bank is a commercial bank based in Santa Clara, California. It was founded in 1983 and specialized in providing financial services and expertise to technologies and life science companies, as well as venture capital and private equity firms. SVB offers a range of banking services, including deposit accounts, loans, credit cards, foreign exchange, and treasury management solutions. In addition to its headquarters in Santa Clara, SVB also has offices in the UK, China, India, and Israel. According to its financial highlights by December 2022, SVB has over $212 billion assets, including $74 billion total loans and $342 billion of client funds. SVB has played a significant role in the growth and success of many of the most well-known companies in the tech industry, including Apple, Google, and Facebook, as well as numerous startups and emerging growth companies.
This is very unfortunate because Silicon Valley Bank has been a cornerstone of the ecosystem for technology companies and life sciences companies for over 4 decades, 40 years.
SVB's collapse was caused by several factors. First, the Federal Reserve raised interest rates, making it more expensive for startups to access funding from private equity funds and shutting down the IPO channel for new startups to raise funds from the stock market. Second, many startups were burning cash too quickly and not being able to generate stable revenues to support their costs, leading them to transfer more and more money or deposit out of the SVB to cover their data expenses. This lack of funds forced the SVB to sell its financial assets to supplement its funding deficits, resulting in a loss of $1.8 billion when it sold $21 billion worth of U.S. government bonds that were not yet matured. This lack of funds and the sale of the financial assets worried the market and depositors, who started transferring hundreds of millions of dollars out of the SVB. In an attempt to raise funds and restore confidence, SVB announced on Thursday that it was seeking over $2 billion funding from large investors. However, the announcement did not stop the shares of the parent company SVB Financial Group from dropping over 60% on March the 9th, causing more depositors to withdraw their money from SVB. The convenience of an online banking system made it easy for depositors to transfer their funds out quickly, and billions of dollars were transferred out of SVB. This situation became critical, and on Friday, March the 10th, the FDIC closed SVB, and an emergency plan to sell SVB to larger banks were put on the table. Although FDIC announced the bank will be reopened on Monday, startups are still worried about their deposit funds, as they rely on their deposit funds to maintain their cash flow for paying salaries and daily expenses. For startups, cash flow is a critical concern, as it can be a matter of survival. The challenges faced by SVB highlights the potential consequences of the campaign launched by the U.S. Federal Reserve and other central banks to combat inflation by terminating the period of cheap money, revealing the market's vulnerabilities. These concerns have significantly impacted the banking sector, especially those with high position in long-term U.S. government bonds, which might result in significant losses. According to a Reuters estimate, U.S. banking have shed over $100 billion in stock market worth over the last 2 days, while European banks have also experienced a decline of roughly $50 billion in value. According to the Treasury, U.S. Treasury Secretary Janet Yellen expressed full confidence.
She also emphasizes in a later interview that U.S. economy is extremely strong and the American banking system is safe, well capitalized, and resilient after the 2008 financial crisis.
The American banking system is really safe and well capitalized. It's resilient.
Just before we finish making this video, a joint statement was made by Treasury, Fed, and the FDIC, saying that depositors will have access to all of their money starting Monday, March the 13th. Low losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. Another measure the Fed came up with is an emergency lending program with additional funding made available to the banking system up to $25 billion through the creation of a new bank term funding program. If any other banks came into similar stress, they are not forced to sell assets. Instead, they can borrow emergency funds from this program with collaterals. This means the Federal Reserve is formally prepared to address any liquidity pressures that may arise. Another piece of good news is that HSBC just announced to buy SVB's UK subsidiary for £1.
HSBC acquires Silicon Valley Bank UK.
Now the depositors of SVB can get all of their money back, and it's a big relief for the startups and the whole banking system. But Wall Street is still worried about more pain, and the risks are on the way for the banking sector due to the rising cost of money. As long as the Fed keeps raising interest rate to fight down the inflation, there's still potential for a recession that is going to hurt everybody. And most importantly, if you're still not buckled up and click the subscribe button, I strongly encourage you to do so. Thank you.